Thanks for joining us at xn.com. In this special report, we'll be looking at gold and Bitcoin. They are hitting one record high after another. And this, of course, sends mixed signals about the mood in global markets. I'm Cristina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, it's quite rare, to be honest, to see a safe haven and a riskier asset gaining at the same time. But that is exactly what's happening right now with gold and Bitcoin. What's exactly driving this rally?
Hello, Cristina. So you are absolutely right. It's really peculiar to see one of the riskiest assets and one of the safest assets just hitting record highs. Now, look, it's tempting to say that these rallies are connected, and they do have some common characteristics, but for the most part, there are individual forces driving each asset. So the common characteristic that has benefited both gold and Bitcoin has been speculation for rate cuts. Lower interest rates naturally push investors towards other assets, towards riskier assets and towards gold, because gold is an asset that doesn't pay any interest. So the lower interest rates go, the more attractive gold becomes. So we've seen a lot of speculation lately that the Fed is about to start cutting interest rates probably during the summer, and that has been a blessing for both of these assets. Now, aside from that, there are some very unique characteristics behind it. So let's start with gold. Gold has been turbocharged by direct purchases from central banks. Specifically, it's China leading the charge. China is trying to diversify its reserves away from the US dollar. After the US weaponized the dollar in its sanctions against Russia, China is basically worried that it could suffer the same fate if its relations with America deteriorate. So it's been buying gold quite substantially lately. And it's not just the Chinese central bank, it's also Chinese consumers. We've seen an implosion, essentially, in the Chinese property market and in the Chinese stock market. And since cryptocurrencies, Bitcoin is also banned in China, it seems that a lot of local investors in China are looking for alternatives, and they have been buying a lot of gold. And that's clear to see from the difference in gold prices between Shanghai and London. Gold prices in China are trading at a significantly higher than the same gold in London. So that shows you that there's a lot of local demand. And of course, we've seen some safe haven flows supporting gold, Christina. We've got a very unstable geopolitical landscape. Investors might be buying gold as a hedge against that as well. Now, in the crypto market, it's been a totally different story. Bitcoin has benefited mostly from institutional interest. We saw last year the introduction of spot Bitcoin exchange traded funds. So these are contracts that give investors, big investors, easier and safer access to Bitcoin. And we can see that it's really smart money that is pushing Bitcoin higher, because all of the smaller altcoins, these alternative coins, those are nowhere close to their own record highs. So what we are seeing is investors want exposure to crypto, but there's a clear preference for higher quality and less volatile crypto assets, which is namely Bitcoin. Of course, last but not least, we have a big event coming next month for Bitcoin. It's the halving event. It's basically a process by which the reward for mining new blocks of Bitcoin is cut in half. So basically, supply growth is reduced, and slower supply growth often leads to higher prices. That might also be part of why Bitcoin has risen so much lately.
So Marios, taking all of this into account, would you say that gold and Bitcoin could further extend their rallies?
I think so, Christina. So look, in a nutshell, I think that they can go higher. So gold, as we mentioned, it's been driven up by central banks, record purchases of gold by central banks over the last couple of years. And this process, I think, will continue because the standoff between the US and China could even heat up if Donald Trump is re-elected president in November. So China has been buying gold, but gold is still only about 4% of China's total reserves. So there's plenty of scope for that number to keep rising, and that could keep demand for gold supported. Now, similarly, interest rates still have not been cut, right? The market has speculated about that, but we haven't seen it happening. And in that sense, I think that gold can still capitalize on interest rates falling back to more normal levels. Now, as for Bitcoin, we have the halving event, as I mentioned, next month on April 20th. Previous instances of this event have been beneficial for prices. If we go back to 2016, 2020, those were good years for Bitcoin, and therefore, my sense, at least, Christina, is that Bitcoin is increasingly entering institutional portfolios, like big investor portfolios, as an alternative asset. It's a tiny fraction of these portfolios, but we are talking about the really big portfolios, and the crypto market is quite small. So these are quite significant. So all in all, I think these processes can continue. I think that the outlook for both gold and Bitcoin is still positive, even though the rallies might not be necessarily connected.
Marios, thanks so much. This was a special report here at xm.com.